Good afternoon, everybody. Welcome to today's daily recap. I am Evan Lazarus, and I am the CEO of T3 Live, and I am very, very, very happy to be here. I don't get a chance often. They don't let me out of my cage much here, so I don't get a chance often to get on camera and to chat, to put my 2 cents in about the market, about trading, about stocks, about what's happening. Overall, I do happen to correspond with a lot of subscribers via email. And as always, you can email me at Evan, E-V-A-N, at T3 Live. I'm always available for questions and answers and correspondence for those that are so inclined to shoot me a "What's up" email. That being said, while I have the opportunity to talk, I do want to talk a little bit about the market. I'm going to highlight some stocks. We're going to talk about what's happening in some places, what's not happening in other places, some of the things that I've heard via whether it's traders that are a part of T3 Trading Group and on our virtual trading floor, or subscribers in general, just sort of overall feedback that I've been getting that I think I can probably shed some light on. Now, the one common theme that I've heard over the last, let's say, 6-8 weeks or what have you, is that the market's tough. It's tough right now. It's tough out there. It's choppy. It's non-directional. It's back and forth. And while that may be true, the question I need to ask everybody that's watching the video, and take some time of reflection if you are watching this, ask yourself the question, are you getting the results that you desire? Everybody that trades, everybody that participates in the market does it for a reason. Are you tapping into your potential? Are you getting the most out of your experience in the market? Or are you one of those that throws your hands up in the air and says, I don't get it, this market's too hard, and you're one of those that make excuses? And for a long time, I was that trader. Very early on in my career, before I was running this company and before I was on the VTF and before I was educating, I was this independent, sort of lonely trader. Not lonely in the sense that I was by myself, but I really was sort of lost in my approach. I really didn't have a rhyme for my reason, or a reason for my rhyme. And it took a very unique experience for me to overcome that, where somebody basically said to me, and somebody who was much more senior to me said to me, looked me in the eye and he said, kid, and I've told this story before, he said, kid, failure for you isn't a question of if, but a question of when. Because I didn't understand my craft, and I couldn't tell you why I did what I did, or why I should have done what I thought I should have done, or why I didn't do, and everything was a second guess, and everything was a question, and everything to me was an enigma. And my options at that point in time, and I do have a point for telling the story, were figure it out or find something else to do. And that's the choice that was basically given to me, and that's the choice that when I communicate with the people that email me and the subscribers and the correspondences that I have, that's basically the message that I tell people. You have to figure this out or find something else to do. There is a method for the madness. There is a rhyme for why things do what they do. And I know sometimes it's clearer to see than others. And I know sometimes it's easier than other times. I get it. If there's anybody that gets it, I definitely get it. But that's the value in education, and that's the value of understanding your craft so that you're prepared. It's not about being a trader or being a successful trader or being a successful investor. It's not about picking the right stocks or being right or even being wrong. It's about going into it with a plan, going into what your situation, knowing what the risks are ahead of time, knowing what the worst possible scenario is ahead of time. I think the most poignant question that somebody said to me years ago was, the unsuccessful market participants think about their gains. The successful market participants think about what it is they're willing to lose and why. And I pose that question to everybody before I get into the stocks is, are you asking yourself the right question? Are you thriving in this market? Are you getting ahead? Are you approaching it the right way? Are you of an objective mindset? Or are you approaching this market the same way you did maybe 6 months ago, hoping, wishing, and praying it was 6 months ago? Now, I can't just blanket statements and say that everything is the same, because everything's not the same. Some stocks are trading in one way, other stocks may be trading in a completely different way. But the question is, are you cognizant of it? Are you approaching the market to say to yourself, where's the low-hanging fruit? Am I a part of that low-hanging fruit? Am I lost? Am I spinning my wheels? What's happening? try to take a step away. It's always healthy for a trader, even when I was actively engaged in the market on a day-to-day basis, I always tried to take a step away and say, what's happening? Am I looking at this objectively? What mistakes am I making? Why am I making those mistakes? How do I corral it? How do I fix it? And I always get a sense of that by the amount of emails I get. Typically when I'm seeing lots of emails come in to me or to customer service or to Scott or to Mark or to Rob Smith or to LeVay or any of the VTF personalities that we showcase here, I know I can get a sense of frustration just by the quantity. So I get that there's a little bit a sense of frustration, but there is a way to rectify it. And the first question I always ask everybody, and I know I'm being a little long-winded here, is, are you really truly the master of your craft? Are you looking at this objectively? If the answer is yes, great. Continue to do what you're doing. Continue to get the results that I'm sure you're getting. If the answer is no, and you're honest about it, seek out the information that puzzles you. And I'm not saying it's one thing or two things, maybe it's several things. But if you don't know what you don't know, then how do you ever expect to get the result you want to get? So that's the question I posed to you on this Friday afternoon before I even get into the market or stocks or trading or anything of that nature. So if I'm giving you a weekend homework assignment, as I do when I was educating, it's that. Think about, are you getting your results, and contemplate what changes you need to make and seek out the information you need in order to help make those changes. As an educator and someone who has a business built around education and information, I will tell you that it's not just taking a class or buying a newsletter or having a conversation. It's a series of those things. It's a series of building an identity for yourself, learning something new, applying it, practicing it, working at it, developing it. And the only reason I can speak to that is because I did it. I went from somebody that was 1.5 steps out of the door of almost being a trader to somebody that reinvented himself, had a relatively decent amount of success doing it, and has been able to build a company around it because I do understand it on a different level than probably most. So that being said, as always, I hope you're getting the results you desire, and I hope that the information that we provide to you on a daily basis, a nightly basis, an intraday basis is useful, timely, helpful. But if you're not getting the results and you're still consuming the information, there's a disconnect. And it's your job to figure out, what is it that prevents me from getting over here? Right now I'm over here, I want to be over here, how do I build that bridge? That being said, I don't want to rehash what John Darcy so eloquently did this morning in the morning call, and I suggest everybody go back and watch it, as he covered lots of different ETFs and indexes. I will step into charts here for a second. We're going to start with the S&P, so let's pop on into it. I'm going to give you a little bit of a different spin than maybe what you're accustomed to seeing. So first we're going to start with a daily. And the reason I like the daily chart is because the daily is always the way to take a snapshot of the intermediate term. For those that listen to Scott every morning, he's all about the intermediate term, sometimes even the shorter term. But I think the daily is the best way to gauge. And again, the intermediate term, what do I mean by that? Well, I mean a series of maybe 2 to 4 to 6 weeks. Somewhere in that 1 to 2 month time frame is what I really consider the intermediate term. Now, if we look at the market, what do we see? Well, just by basic analysis, again, this is what we call table napkin. It's clear support, clear resistance. We broke above yesterday, probably got a lot of people thinking, we want to be long, and a very, very, very big failure this morning. So the market has clearly made a statement. Now, that being said, we've been in a range for the better part of the last month. If you go back to the beginning of March, again, you can see this sort of level of support, upper level of resistance, and everything in between is just noise. So what I think traders really need to be on the lookout here for is a clear, definitive break of support or resistance. Now, we tried to break resistance today to the upside, and the market clearly told us that's not about to happen. So we need to take our cues from, again, the volume of the language of price here, and respect what it is the market's telling us. If you're not getting success and you're dipping your toe on the long side and you're trying to figure out where to be, take a step back, take a few days off, reevaluate. Let the market come to you. You don't necessarily need to force it. I find a lot of traders always trying to force a square peg into a round hole. If you can't take the square peg and put it in the square hole, you shouldn't be trading. It should be very, very clean. You should be able to see it very, very simply. If I jump up a time frame and I head up to a weekly, and I think a weekly is a really great look because a weekly has always been the time frame that I may not trade from, but provides me a lot of clarity as a technician. Well, what does that mean? Same concept. You can see these overlapping candlesticks over the last 5, 6, 7 weeks that has basically told us or defined what this market has been doing. It has been very, very range bound. And the market overall, while still intact, meaning sitting at highs, flirting with breaking new highs, become much tougher on a week-by-week, day-by-day basis. And that lack of follow-through, I think, is the thing or the catalyst that's driving traders a little bit nuts right now. Wait it out. As always, the market is not about instant gratification. It's about stepping in when you have clear signals. And if you don't have those clear signals, make sure you're not fully invested. Make sure you're not going on tilt. Make sure you're not causing harm to yourself. Because the market can have the ability to do that to some individuals. Now, overall, I'd say that we're in a spot where the market could go either way. This weekly breakdown or this breakout failure could result in some follow through to the downside. The next level of, I think, significant support in the market, should we break, is probably not down to about SPY 175, down in this zone. And if we go back, again, you can see this was really the last breakout area back here in October. We broke out, we rallied up, we pulled back, we retested, and we launched again. Should we break this intermediate term, again, kind of keying on what I said this morning, should we break this range up here, chances are the market's probably going to come back to this area. So be prepared, have a plan, know what it is your expectations are and why. Why being the most important question. Let's jump over and look at a couple of specific stocks. For the weekend, if you are not getting the daily off-the-charts newsletter and you are an active trader, someone that's participating in this market every given day or several days a week, or you're engaged and you're checking your stock quotes several times a day, there is a lot of value in this product for those seeking the ideas, because we're going to give you ideas that are both long and short. It's your job to decipher what's appropriate for you in terms of the ideas, but very, very, very good tool for those seeking what I consider low-hanging fruit opportunities. So a couple of those that were highlighted yesterday, and again, we'll focus on some of the good ones and some of the not so good ones. I'm not here to just sort of talk about what's working. And I've seen this pattern a lot in some of these momentum names. Again, this is Priceline, huge momentum name, probably not a symbol for everybody to trade just via the price of it alone, but very, very bearish pattern. Big support level down here around 1150. A little bit of a break of this trend line, which is what we highlighted last night and off the charts. A break of this trend line could result in some big selling. I suspect this one's probably going to go substantially lower based on this pattern. Again, same pattern here in Google. Google, another big momentum tech name. Again, this is split adjusted, so not coming up exactly as I want. So we'll table that one, but again, go back to off the charts. I can actually bring it up, but we'll move along because it doesn't seem to want to, our charting doesn't seem to want to cooperate, so no sense in forcing it. DDD, triple D, printers, 3D printers, looks like attempting to break support here. Again, a big reversal in price. You know, for those that are pattern traders, we call this pattern an inverse cup and handle. Has this U-shaped pattern, like an upside down cup or an upside down U, with a little bit of a handle. Here's your handle. This is, again, significant of lower prices to come. So we could be on the verge of, you know, some of these stocks that have seen just immense upward movement over the last 6 months, year, 2 years, 3 years, some of them start to really break down. And the one thing I will tell you as a trader from my experience is that we will always go down faster than we will go up. The reason being simply is the market's built on basic emotion, fear and greed. Greed is an emotion that takes longer to develop, but when fear sets in, fear creates panic, and panic happens a heck of a lot faster. Always. Forever. Forever and ever and ever. 2008, the bear market of the early 2000s, the internet bubble crash, you name it, you're always going to see fear create selling. And when selling happens, it typically happens a lot faster than when we go up. Greed is slower, fear is faster. So be prepared. And if you're not skilled on the short side, I'd say step away or learn how to do it. Because you don't want to be one of those traders that said, I shoulda, coulda, woulda. Take the opportunity as it presents itself and look at it objectively. A couple of other stocks that I want to highlight. DuPont, again, another one that we had highlighted on off the charts that looks like it possibly, again, nothing's really going to be bigger than the market. Looks like we broke out a couple days ago, a little bit of a consolidation pattern up here that was highlighted. You know, we tried to get out of this pattern and get going, but market forces just pushing us back down. I wouldn't say this trade is over or broken, but I would definitely approach a lot of the longs a little more cautiously. As you know, the market makes a big move to the downside, it's going to be hard for any stocks to break out and hold those levels. So be very, very careful with your breakout trading, as that has worked for a fairly long period of time at this point. You know, should it change, be okay with change. You know, be prepared, come to the battle with a couple of ideas to the short side, or things that may be a little, you know, working and following through versus that's, you know, those that are not, you know, following through. A couple of other ideas, Alaska Airlines, ALK, same concept. Again, here's a nice breakout pattern, you know, multi-week consolidation, breaking out, but again, failing here at that breakout because the market there's just too much selling pressure in the market. Is this trade over? It remains to be seen, but I would definitely scale down on the risk that you put into the longs. If you're looking to, again, put risk somewhere else, I'd say focus on the lower hanging fruit, or you know, go with the forces, don't fight the forces. As always, again, I could probably go on for another half an hour here with trades and specific setups. I would say do yourself a favor if you're having a, you know, if stock selection is your issue or you need other trading ideas, use some of the resources that we have, like Off the Charts or our intraday virtual trading floor. If it's just education in general, how to evaluate the market, how to evaluate support, resistance, patterns, you know, do yourself a favor, look into some of the courses that we offer. I happen to think that a lot of people are getting success with the Active Trader program. Rob Smith's done an outstanding job, you know, approaching it with candlestick breakout strategies. There's a lot of good resources within T3 Live you may not know exists that, you know, again, seek it out. I'm not saying that it's right for you, but at least entertain the idea, because you got to ask yourself the question, same question I asked myself, are you happy with the results you're getting? And if the answer is no, what is it you're going to do to change it? Because if you don't take initiative, it won't change. With that, I will tell you that with selling in the market like you saw today, creates opportunity. And that opportunity can be very, very fruitful for those that are prepared and those that know where they want to be and why they want to be there. As always, I'm Laz. I hope everybody has a fantastic weekend. Again, it's Evan at t3live.com, and I'll talk to you later.